Muziba, problem they don't know. You see, us, Pitenzo Manga, Kanjara, when we are constructing this, we are very serious. And by then, we didn't have this heavy duty equipment, my excavator, Matania. We used manual labor to construct this. You know, when you are building a mountain or a hill, secretly per foundation. You know, there are certain things that you need to make sure when you are laying the foundation for a mountain or a hill, like the way we did Kansas. That's why you are survived by NP. Look at it, Manga Chinese, Monga Mwenda Mwaka Pezi, Iko Koroga Manje, so apaso nyumba yanyu wanyango zipeta izafikirika so na madoti rupiri so anamambia bwino isa anazinga magonga ma materials especially for foundation. So I am. Okay, good evening, ladies and gentlemen. We are back, and as we promised, we are going to talk about the process of rendering a satisfactory explanation of the financial transactions of an entity. The first thing is collecting data. Some of you say data. It depends on who colonized you. In any data. We collect data from source documents. So these are usually the documents where a transaction is first recorded. An example of a source document is an invoice. An invoice is a demand for payment. When you sell something on credit, you issue an invoice demanding the customer to pay. Another example of a source document is a receipt. When you sell something for cash, you acknowledge receiving that cash by issuing a receipt or a cash sale. Those are source documents. So the first thing is to collect data. You collect data from source documents. The next stage is to analyze this data. This data is analyzed in diaries. We call them books of prime entry, books of original entry, depends on who colonized you. And there are 7 major books of prime entry where we analyze data from source documents. So we are starting to put like terms together. The first book of prime entry is the sales day book. So a day book is a diary or a journal where you record daily activities. The source document that you use to record in the sales day book is the sales invoice. So all the invoices, you break them down, you record them in the sales day book, date, invoice number, name of customer, what did they buy, quantities, values, if there is VAT, net, gross. Next. So that's the first book of prime entry, sales day book. At the end of the month, the quarter, the year, you will get the total on the sales day book. It will show you how much you sold on credit. Now, the second book of prime entry is the reverse of the sales day book. Sometimes you sell things, maybe you sell the wrong quantity, the wrong type, the customer sends some back or sends all of them back. You need to give them a credit note to acknowledge that, we have canceled the invoice that we gave you. This amount, don't pay us. So a credit note is sometimes referred to as a negative invoice. Say, okay, we asked you to pay this. Okay, don't pay us this because you have brought back those goods. So we will record this transaction in a sales returns table or a returns inwards table. It depends on who colonized you. So the source document is the credit note. The third one is now the opposite of sales. When we buy goods, either for resale or for use in our day-to-day business, we call those purchases. In ordinary English, to purchase is to buy. In financial accounting, purchases are those goods bought either for resale or for use in our only day-to-day business, production, manufacturing, etc. So when you buy on credit, those suppliers will give you an invoice. They are demanding you to pay them. So now you will record all these invoices from suppliers in the purchases day book. Now, just like your customers can return some goods to you, you can also return some goods to your suppliers. They sold you the wrong quantity type. So you will return some goods to them. They have to give you their credit note. You, to acknowledge that credit note, you will give them your debit note. So you are saying, I will not pay this. They are saying, don't pay us this. You say, yes, I will not pay this. So you will record all those your own debit notes attached to their credit note in the purchases returns table or returns outwards table. That's number 4. Number 5, we have small day-to-day payments, cash receipts. Those are petty transactions. Go and buy newspaper, kaguleni mabanzi, kaguleni to sugar to asira. Those are petty transactions. We record those transactions in the petty cash book. Most of you are familiar with petty cash. Petty cash. We don't have petty cash. No, we have run out of petty cash. So petty is small. So small day-to-day cash transaction, petty cash book. The source document will be the petty cash voucher, the receipts attached, any piece of paper where you record someone who has acknowledged the receipt of this money, those will be source documents. The petty cash voucher is supposed to be there for uniformity's sake and for tracking. Then there's the big guy that handles cash receipts and payments. This one is the cash book. It's also a day book, but we don't put day, we just say cash book. So the source documents are numerous: payment vouchers, bank transfer letters, SWIFT forms, transfers, bank statements, bank debits, bank credits, any piece of paper where someone has signed that they received money, or you signed that you received money from them, deposit slips. All those are source documents for the cash. That's number 6. Now, number 7 is a good one. This guy takes on anyone who does not fit in any of the first 6 day books. So this one is the general journal, or we just say journal. So anything that is not a credit sale, is not a credit purchase, is not cash transaction, is not a sales return, is not a purchases return, these will be entered in the journal. In fact, the journal is also special because it is used for other purposes other than a book of prime entry. It is also used to move us from this stage to the next stage in the bookkeeping process. So in the next video, we will move now from the books of prime entry into the general ledger. Until then, see you.